It is Monday, ladies and gentlemen, and we have officially broken 40k with Bitcoin, and analysts are saying that we are on our way to $100,000. Is this possible? Let's find out in this video. But there is more. Cristiano Ronaldo is being sued for $1 billion for endorsing cryptocurrencies. Altcoin season could be starting, and much more crypto news that will be covered in this week's video. So, welcome back again. I'm Theo, a content creator for the Alt Crypto Talk team. Remember, nothing in this video is financial advice. Purely my own opinion and based on my own research. Do not invest in anything you can't afford to lose. And be sure to smash that like and subscribe button and leave a comment if you have any questions whatsoever. And be sure to follow us on Twitter at AltCryptoGems for daily crypto content. And check out our website for frequent guides, project reviews, articles, and everything crypto related. Well, my friends, let's jump straight into the video. Okay guys, let's start off with the first article that is covering the regulators that have scared out SoFi out of crypto. SoFi, the financial services platform that introduced crypto trading in 2019, is winding down its crypto business, the company announced. New account creation has been disabled and existing users have 3 weeks to migrate their crypto accounts to blockchain.com before they are automatically liquidated. Migration eligibility is subject to geographic restrictions. Users in some states will have to sell certain unsupported tokens including AVAX and Sushi, while New York residents are still ineligible for the migration altogether. SoFi had nearly $140 million in crypto as of Q3, according to the company's financial statement, mostly in Bitcoin and Ethereum. SoFi's exit from crypto comes as a result of heightened scrutiny of the crypto sector by regulators, according to a report from Bloomberg. SoFi's bank charter, granted in 2022 of January, was conditional on SoFi's crypto business receiving a regulatory sign-off within 2 years, with the possibility for 3 one-year extensions. SoFi had acknowledged the possibility of a swift wind-down of its crypto operations in its 10K annual report, stating, "While we are engaging with the Federal Reserve to determine whether there is a path to conform our crypto-related activities to the requirements of the Bank Holding Company Act, there can be no assurance that such attempts will be successful or that we will receive any extensions from the Federal Reserve to continue our current crypto-related activities beyond the 2-year conformance period from the date we became a bank holding company, and we may ultimately be forced to wind down such activities in a short period of time, as we can obviously see." Now, for those who are in the SoFi protocol, I would highly recommend getting all of your assets out as soon as possible. If you are one of those users that has any of that $140 million worth of crypto, get it out ASAP. I understand that some of you may experience problems, but this is just going to be a quick article just to let you know that you need to get your assets out ASAP. So, that was a very quick article. Let's move on to the next one, which is very important as I believe this is one of the biggest narratives in the crypto space, probably the biggest narrative. Now, tokenized securities are basically real-world assets, and companies that are going to be tokenizing real-world assets are going to thrive, in my opinion. Now, I'm going to mention a few real-world asset protocols after we've read through this article. So, the cryptocurrency boom ended in frauds and fines. The revolution in digital assets is grinding on nonetheless. Banks and institutional money managers have long been intrigued by the scope for efficiency gains from using the technology underlying crypto, the shared immutable digital ledger, or blockchain. Some are increasingly convinced about its disruptive potential, just like me. Now, the big prize for financiers is the tokenization of financial securities and funds. At the core of the idea is standardization. Time and money can be saved by stripping out financial intermediaries who all work on different versions of the same data in their own silo. Transactions between them must be all checked and verified. Tokenized volumes today are small. Clear, consistent regulation will be needed to achieve scale, according to Lamine Brahimi of digital asset group Taurus. It also depends on the involvement of mega custodians to safeguard holdings and the existence of robust tokenized money or deposits. Institutions are starting to take advantage of the benefits that tokenization offers. Franklin Templeton launched the first tokenized money market fund using the Stellar blockchain earlier this year. Others are following. AIRDROP launched a tokenized sterling fund in the summer. Shares and investment funds are also switching onto the blockchain. Those could just be the low-hanging fruit of blockchain technology. Tokenization could also make a big difference to markets such as private debt and structured finance, according to Ralph Kubili, board member of the Casper Association in Switzerland. Information on cash flows and payment obligations could be coded to public tokens, potentially increasing liquidity and opening up access to many more investors. That is a fact. In this way, tokenization would blur the line that separates private and public assets. That means it is potentially more than an efficiency tool for traditional asset managers. Should it go mainstream, there will be an opportunity to take the fight to the alternatives industry. Now, I'm going to share a few real-world asset tokenization protocols, 3 of which are my favorite protocols in that sector, and if not, some of my favorite protocols of all time. So, number 1 is Avalanche AVAX. Even JP Morgan have recently integrated onto the Avalanche network, creating their very own subnet. So for me, Avalanche AVAX is a great investment. This is not financial advice, remember that. This is me conducting my own thorough research and investing into Avalanche myself. Avalanche is my favorite layer 1 Polygon and RWA protocol merged together. However, my other two favorites are Alliance Block Nexera, which I've believed in for a very long time and I've been holding for a very long time, and it is one that I continue to dollar cost average into. Now, Alliance Block is one of the best real world asset protocols out there. It has a fairly small market cap of $110 million, which I believe can go to above $1 billion and more. And next, guys, we have TokenFi, which is Floki's sister token, and TokenFi is going to be revolutionizing the entire industry of RWA. Now, TokenFi has a very small market cap under $40 million. I believe this one can go to $1 billion and beyond also. I'm not going to be giving you price predictions. We've done that in previous videos and I will do that in future videos. However, this is just three of my favorite RWA protocols that I wanted to mention briefly. Moving on to the next article, we have got Cristiano Ronaldo, which is facing a $1 billion lawsuit for endorsing cryptocurrencies with Binance. Now, we all know the Binance news as we covered it last week, and you can watch that video if you need to catch up. However, one of the most popular footballers in the world that has ever existed, Cristiano Ronaldo, is facing a class action lawsuit in the US over his promotion of Binance, the largest crypto exchange in the world. The plaintiffs claim his endorsement led them to make loss-making investments. They are seeking damages of a sum exceeding $1 billion. The BBC has contacted both Ronaldo's management company and Binance for comment. In November 2022, Binance announced its first CR7 collection of NFTs in partnership with Ronaldo, which the footballer said would reward fans for all the years of support. NFTs are virtual assets that can be bought and sold, but which have no real-world form of their own. In other words, they only exist digitally. Generally, they are used to mark ownership of something such as a picture or video online. CR7 refers to Ronaldo's initials and shirt number and is used as branding in a range of products from footwear to fragrances that have helped him make one of the wealthiest athletes on earth. In a social media video announcing the partnership, Ronaldo told would-be investors, "We are going to change the NFT game and take football to the next level." The cheapest NFT from the collection was priced at $77 when it went on sale in November 2022, but 1 year later it was priced at about $1. Now that is an insane drop. The claimants allege that Ronaldo's promotion of Binance led to a 500% increase in searches for the crypto exchange, which is registered in the Cayman Islands. They also say it led to use the firm to invest in what they call unregistered securities, such as Binance's BNB crypto. According to the US Securities and Exchange Commission, these assets can be considered securities, and so celebrities endorsing them must follow US law. Not nice. Mr. Gary Gensler, the SEC chair, which no one likes, previously said celebrities must disclose to the public from whom and how much you are getting paid to promote investment in securities. When celebrities endorse investment opportunities, including crypto asset securities, investors should be careful to research if their investments are right for them, and they should know why celebrities are making those endorsements. The claimants allege Ronaldo should have disclosed how much he was being paid, but did not. Nigel Green, boss of consultancy firm De Vera Group, said the problems at the heart of the case went wider than just one footballer. It is crucial to recognize that blaming Ronaldo oversimplifies a complex issue, he said. Instead, attention should be also directed towards global regulators who have been slow to establish clear guidelines for this evolving financial landscape. Ronaldo and Binance appear to have plans to work together again in the future, with a recent social media post from the footballer saying they are cooking something up. Neither have responded to the BBC request for comment. The class action suit was filed a week after the US Justice Department told the firm to pay $4.3 billion in penalties and forfeitures. It accused Binance of helping users bypass sanctions around the world and of making it easy for criminals and terrorists to move money. Its chief executive, CZ, resigned from the firm, having admitted money laundering violations. MLB, Major League Baseball, Formula One, and Mercedes-Benz are also facing class action lawsuits filed on the same day over their promotion of failed crypto exchange FTX, which was a huge collapse, as we know. So, guys, I don't know what you think of this, but Ronaldo doesn't deserve a $1 billion lawsuit. This is all the regulators' fault. They have not provided clear outlines and guidelines. Ronaldo should be let free, and the regulators should just clean up on the laws, and then no one would create any problems. So, that's your fault. Get to it quickly, and then we can start suing people if they do it after all your laws have been created. But moving on to the next article, this is the big one that we've all been waiting for. Crypto executives are saying the bull run is underway and could lead to $100,000 Bitcoin in 2024, which is just under 27 days away. So, executives in the crypto industry called the start of a new bull run with a growing number of voices calling for fresh all-time highs for Bitcoin in 2024 above 100k. Bitcoin has rallied more than 120% this year, with many optimistic about the surge continuing in 2024. It feels that 2023 was a year to get ready for the bull run that is yet to come, but the sentiment is very hopeful for 2024 and 25, Pascal Gauthier, CEO of Ledger, told CNBC last week in an interview. The digital currency's record high of nearly 69k was hit in November 2021. Since then, the crypto industry has been hit with a litany of issues, from the collapse of coins and projects to bankruptcies and criminal trials. FTX once was the biggest exchange exchange in the world, collapsed with its founder Sam Bankman-Fried facing over 100 years in prison after he was found guilty on 7 counts of criminal fraud, which he entirely deserves. Meanwhile, Binance chief Changpeng Zhao pleaded guilty to criminal charges and stepped down as the company's CEO as part of a $4.3 billion settlement with the US Department of Justice. That we weren't very happy about. Many in the industry see the 2 cases concluding as a line being drawn under issues that have plagued the crypto market. I think that once you get the speculative phase out the way, which I think we're almost done with, probably not yet completely done, then you can get real builders focusing on the technology and the problems that can solve in the world, rather than just having a digital casino for people to trade, David Marcus, CEO of Lightspark, told CNBC last week in an interview. Marcus, the former leader of Facebook's failed DM stablecoin project, is now working on technology to improve Bitcoin as a payments network. Now that those issues are out of the way, investors are focused on what the industry sees as positive developments. The first is the growing excitement that a Bitcoin exchange traded fund, or also known as an ETF, might be approved anytime soon. This could bring in larger traditional investors who previously did not want to touch crypto at all. I think what the ETF means really is that Bitcoin is going mainstream, and that's what people were waiting for. Well, everyone in the crypto industry anyway. The second development is the Bitcoin halving, which takes place every 4 years and is scheduled for May 2024. Halving is when miners, which are entities who uphold the Bitcoin network, see the rewards for their work cut in half. This keeps a cap on the supply of Bitcoin, of which there will ever only be 21 million coins, and often is a factor behind a new rally. A number of market participants are expecting a bull run sometime after the halving, but given the ETF news, we could very well have a run before that, leaving most investors on the sidelines. That could cause a massive upward run in the price. Vijay Iyer, Vice President of International Markets at crypto exchange CoinDCX, told CNBC. Bitcoin at 100k, there have already been some bold calls for Bitcoin in 2024. It began with Standard Chartered last week, which reiterated an April price call that Bitcoin would hit 100k by the end of 2024. The bank said this will be driven by the approvals of numerous ETFs. Yes, flipping please. That would mean a roughly 160% rally from Friday's price of around $38,413 according to CoinDesk data. Matrix Port, which builds itself as a crypto financial service firm, released a note last week projecting Bitcoin would reach $63,000 by April 2024 and 125k by the end of next year. That's even more than 100k of price prediction. Based on our inflation model, the macro environment is expected to remain a robust tailwind of crypto. Another decline in inflation is anticipated, prompting the Federal Reserve to likely initiate interest rate cuts. Combined with geopolitical cross-currents, this healthy dose of monetary support should push Bitcoins to new high in 2024, which could be absolutely insane. Many commentators see easing monetary policy as supportive for Bitcoin, which is viewed as a risky asset. Meanwhile, some see Bitcoin as a sort of safe haven asset to pour money into times of geopolitical strife. When asked if Bitcoin would hit 100k in 2024, Gauthier said maybe, but declined to give a price prediction. What we see is strong fundamentals, he said. Iyer said that the price of Bitcoin is consolidating below a key level of 38k, which is bullish for Bitcoin. Once this level is broke, Bitcoin could rally to between 45 to 48k next, he said, which we are basically on the way. However, he warned the rally, which is in large part built on expectations of an ETF approval, could fail if the project is rejected by regulators again. An all-out ETF rejection could play havoc to this run as well, hence definitely something to be mindful of, he said. And he is not completely wrong, guys. This could be the biggest bull trap ever happening, or one of the biggest anyway. To me, I'm not going to be investing heavy until I definitely know, but then again, we could be too late. But I'm going to be slowly dollar cost averaging in with small amounts of money if I'm going to be buying things. This is a risky time to invest, guys. However, if we are leading into a bull run, it could be incredible. I just hope you have some assets ready. Now, moving on to the final article, which is connected. Avalanche Helium lead monthly crypto gains as bullish Bitcoin consolidation spurs altcoin season. So, is altcoin season finally upon us? Let's find out. November brought explosive gains for altcoins as a wide range of smaller crypto outperformed Bitcoin, prompting calls for an altcoin season. The native token of Avalanche AVAX surged 97% over the past month. I love AVAX, by the way. The most among large crypto digital assets, benefiting from the news that finance giants JP Morgan and Apollo are using the network to test real-world asset tokenization. RWA, ladies and gentlemen, which I mentioned, this is one of my favorite protocols for it. Transaction volumes on AVAX blockchain also experienced an uptick over the month, recording its highest weekly traffic of $2 billion in transactions in a year, a report by blockchain analytics firm Into the Block pointed out. The report also noted a sizable increase in inflows to Avalanche over the last 2 quarters of the year, with $79 million in net flows in Q3 and $56 million in Q4 through late November, helping rejuvenate the ecosystem. Internet of Things communication protocol Helium Helium also stood out with a 110% rally last month. Other notable best performers include NFT marketplace Blur's token and decentralized cross-chain liquidity protocol Thorchain's native crypto, Rune, both doubling in price through the month. Altcoins outperform as Bitcoin grinds above 38k. Bitcoin, meanwhile, booked a 10% monthly gain, spending most of the month between 34 and 38k. After multiple previous breakouts, attempts, and being sold quickly, the largest crypto by market cap apparently jumped above the range on the last day of November, hitting a freshly new high of 38.8k. The second largest crypto, ETH, increased 13% in November, stabilizing above the 2k level for the first time since April and consolidating there. Slowing momentum for large cap crypto prompted investors to rotate profits into riskier corners of the digital asset market. This is visible in CoinDesk Market Index sector performances, which posted larger gains than Bitcoin. The Culture and Entertainment Sector Index CNE, a proxy for NFT and metaverse tokens, and DeFi sector DCF rose 42% and 39% over the past month respectively. And you can see that all on this chart. The widening breadth of the crypto rally signals that we are in the midst of an altcoin season, investment advisory from ByteTree said in a report this week. Market observers refer to altcoin seasons as periods when smaller crypto outperform Bitcoin, and that is what we want. That's where all the real money is made. ByteTree data showed that about half of the top 100 crypto are neutral or rising trend versus Bitcoin. That confirms it is altcoin season, the report said. So guys, I hope you're ready for a huge altcoin season pump. Well, we hope so anyway, because I know I am, even though I would love one more dip to buy up some more altcoins. So guys, that is pretty much it for this video. Looking at the current crypto market cap, we are sitting at $1.54 trillion. We are quickly getting closer to a $2 trillion market cap, which is possible before the end of the year. However, I think unlikely. The Fear and Greed Index is currently sitting at 75, which is very bullish. We've got Bitcoin dominance at 52.6%, while Ethereum is at 17.5%. Ethereum Gwei is at 42, so it's very expensive, and I highly recommend just waiting for the Gwei to go down if you want to do Ethereum transactions. We've got volume up with $60 billion, which is up 33% over this weekend, and the Bitcoin halving is happening in 136 days, which is set to happen in May. Now, that could be absolutely huge, and that is probably what is going to take us into the huge bull run that is coming. The best centralized exchange platform for buying, trading, and earning, Bybit is home to all your favorite cryptocurrencies, and you can claim up to $4,380 just by signing up using the link in the description below. It's simple. If you need help finding the right crypto gems, then follow us on Twitter at altcryptogems and head over to our website to get your hands on detailed project reviews, crypto guides, and more. Thank you very much for watching, and we hope you found this video helpful and informative. Until next time, DGens.